If you're self-employed, one of the best extra deductions you can take for your business is the home office deduction. And to be quite honest, it's not extremely difficult to understand, but there are a few things to keep in mind so you utilize it correctly. Here are the top 3. Number 1, make sure you have a space in your home that's set aside to be used exclusively for business on a regular basis. Number 2, figure out the square footage of the space that you set aside for the use in your business. And number 3, make sure you keep track of all the expenses for your home during the year, like your rent or mortgage interest and your utilities, things like that. So first things first, make sure you've set aside a space in your home that is used regularly and exclusively for business. This can be a space that is considered your primary place of business. It is where you meet clients, or it's a separate structure from your home that is used for your trade or business. In order to determine if your home is your principal place of business, you basically need to determine the level of importance of activities you perform at your home and how much time you spend there as compared to any other place for your business. Basically, if your home office is a place where you perform the majority of your administrative and management activities and you have no other fixed location where you're doing a substantial amount of management or administrative activities, your home office would be your principal place of business. And the IRS has a list here of general ideas about what administrative or management activities are and what you can do in other locations. It doesn't necessarily take away from these activities in your home office, making it your primary place of business. So as long as you have a space in your home that is set aside exclusively for these things, such as a room or a specific section of a room that is set up for your home office, that would be your principal place of business and you have a home office. Now, do understand there's a difference between you consistently using a space for business and a space that is used exclusively for business. Meaning, just because I'm always doing work at my kitchen table, or I'm always doing work on the family room couch, does not mean that is my home office space. No, in fact, those are personal use spaces, and they do not rise to the level of exclusively used for business. Those things constantly have personal use in them. What you want to do is have either a separate room or a specific section of a room that is used exclusively for business that has your desk, your computer, your equipment, whatever else you need for your home office, and is only used for that purpose. It is not used for your kids to play video games or your kids to surf the internet. It is used exclusively for you, for business. You will still have a defense for that. To understand, though, having a separate room for your home office is obviously the best defense. And you shouldn't use something like a guest room or something because, again, people come and go from that room for personal purposes. You really want something that is used exclusively for business. Which brings us to number 2, which is, now that I figured out what this space is that I'm using exclusively for business, let's figure out the square footage of this space. Because I have 2 options for the home office deduction. I can either take the simplified method, which is $5 per square foot of my home office, up to $1,500 of a deduction, or I can take the proportional share of my home based on the square footage of my home office. Let me explain. If I have a 10 by 10 room that I'm using exclusively for business, that means I have a 100 square foot home office space. If I take the simplified method, then I just look at my home office square footage, which is 100 square feet, and I multiply that by $5. I would then have a $500 home office or business use of home deduction. That's the formal name for this deduction. I can go up to a 300 square foot office because I can take up to a $1,500 simplified method home office deduction. Or I can take my proportional share of actual expenses, which is determined by my home office square footage over my home's total square footage. So let's say that my home's total square footage is 1,000 square feet. So that means I would take the 100 square feet of my home office divided by the 1,000 square feet of my home in total, and I would get 10%. 10% business use of home. I would then multiply that 10% by my expenses that I paid for my home during the year, such as, let's say you pay $10,000 in rent and $1,000 in utilities. That means proportionally I get $1,000 in my rent and $100 in my utilities for a total $1,100 home office deduction. Obviously, that is better than the simplified method. And what you want to do is you really want to compare what is going to be better, the simplified method or actual expenses. Generally speaking, actual expenses will be better. So I would always lean towards taking actual expenses. And if people tell you, oh, don't do it, it's an audit risk. No, it's really not. Especially if you're doing things correctly and you can defend the thing that you're doing, you should absolutely take the actual expenses and reduce your self-employed income as much as you can. You've already paid for your home expenses. Take the proportional share of them that you are able to take. Do not be fearful of an audit if you have a good accountant that's helping you make a good defense for the thing that you're doing. And so that brings us to step number 3, compile all my expenses that I paid for my home during the year. Like I just talked about, if I'm going with actual expenses, I'm going to need to see the proportional share of those expenses I'm going to get, which is determined by my square footage, and then I see how many expenses I have, and then I'll figure out my home office deduction. Do understand, whether or not you rent your home or own your home, you can take this deduction. So if you rent your home, all you're looking to do is add up your total rent for the year, your utilities for the year, if you have renter's insurance, and if you did any repairs, maintenance, things like that. Those things go onto the form for your home office deduction. And if you own your home, you're going to take your mortgage interest, your property taxes, your hazard insurance, your utilities, your repairs and maintenance, if you have an HOA fee, and then a little bit of depreciation, and you're going to multiply that by the business use of your home, and that's going to be your deduction. And this is especially great for homeowners who don't necessarily have enough mortgage interest and property taxes to itemize, like the standard deduction is generally greater than their itemized deduction. Well, now you don't miss out on being able to utilize these expenses that you paid during the year. You get to take them as a home office deduction, at least your proportional share of them in your business. So definitely don't sleep on this deduction. It's a great little addition at the end of the year to your expenses for your business to reduce your taxable income on a sunk cost, meaning you have to pay to live somewhere. So if you can set things up so that you have a office in your home to be able to utilize some of those expenses you're already paying for, you have to pay your mortgage interest and your property taxes or your rent. You have to pay for these things. You might as well also additionally benefit in your business for these things. And now that you understand what to do in order to utilize this deduction, you're probably wondering, okay, well, how do I actually get this on my tax return? Do I pay for things out of my business? No, keep everything paid personally. Your personal expenses should be personal expenses. This is a tax return item. You file this on Form 8829. That's where you're going to put the home office square footage, your home's total square footage. You're going to then put in your actual expenses, your either direct expenses or indirect expenses. Indirect expenses would be your total mortgage interest, your total property taxes, your total utilities, those things that are proportional to your business. If you have certain expenses like repairs and maintenance to the home office room itself, those would be direct expenses. I don't want to take a proportional share of them. I want to take the full expense. And so I'd put it on the other column, not the indirect expense column. But understand, most expenses are going to go in the indirect column. It's going to be the total for the year for your home, put in there. And then this form will then take the percentage that you calculated at the top and multiply that by the total expenses that you have. And that's going to give you your total for the year. And then that's going to go up onto Schedule C on your personal tax return. Do understand, this goes onto Schedule C on your personal tax return and is in coordination with Schedule C for self-employed income. This cannot be used if you have an S corporation business. If you have an S corporation, really what you're looking to do is use an accountable plan, which is a video for another time. So you don't necessarily lose the ability to do this, but it does have a couple extra steps in order to utilize it correctly, something to talk about with your accountant. And if you are someone in a partnership, you can use this form as a guide and take unreimbursed partnership expenses for your home office if you have exclusive use and all the other things that we talked about. But again, it's not going to be used directly on your tax return. This is for Schedule C filers to utilize Form 8829. And the last thing I'll leave you with is this. If you're able to establish your home office as your principal place of business, this is going to dramatically increase the amount of business miles you can get for your vehicle if you need to drive your vehicle for business. Because now your first office of the day is your home office, is your home. Anywhere you drive from your home office to your next business location are business miles. Otherwise, your business miles do not actually start until you've reached your first office of the day, your first business location of the day. So if you can establish this, it has a lot of great impact for you in your business. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. And be sure to follow me on TikTok and Instagram, where I talk about other things in the tax world. And you can be sure to tag me in videos there if you'd like me to comment on those. Once again, thanks so much for watching. I'll see you on the next video.